All right, video 2 of 2 on 126, 2 of 3, sorry. We have Fortinet, a good company, buy the dip mode, very pretty P&L, so no fundamental reasons to sell it. If I'm an investor, I'm in it, I would sell covered calls, consider selling covered calls. Earnings are in 11 days, so if we're lucky and it dips on earnings, I would look to buy dips. This is a closer look at the price action. You can see there's a hard seller at 102, which makes the opportunity as well. It's a problem until they take it out, and then it becomes a catalyst, and then they go to 110. So 102 is important. Buyers, they will step in at 94.50 and 91.50. If you lose 91, you're probably going to 86 or lower, which would make sense. You would want to go inside this candle right there. So down to 83. It's a buy the dip moment. I'm going to put an alert myself down there. Fiverr, shyster company. I shouldn't say that. I failed at hiring anyone from Fiverr. Every time I needed something, it was just they said they cook the books. They cook the books where they say, oh, this guy's got a 98% response time within, like 98% of the time he responds within 5 minutes. That's because he's got a bot responding to every email, but then they don't respond for days and days unless you reach back out to them. So that's faking us out. Anyway, if you lose the support where they're at, there's not like much room. You're probably going to end up at 27 or 25. Better support there. If it falls into 21, much better support, but that needs to hold. On the upside, anything above 35.50 should bring you an attempt to reach 40. Totally tradable. Earnings in 24 days, you can probably trade it before the earnings unless they pre-announce. Tradable chart, nice easy lines. No touchy, not as an investment. Tradable, but not as an investment. GDX. Okay, so we knew that they could bounce from this and from that. And now we have also said beforehand that the bounce might fade because that's what they're doing. They're selling rallies. Now I want you to focus on this area here, which is around 39.50 right there. It's been pivotal for a long time, right? So that's a fade zone. Okay, Thinkorswim just crashed on me. If this here or 39.50 is a place where I would exit my longs because that's what they're doing. Rally, sold, higher high, right? Rally, sold, higher high. And then they fell. Rally, they fell below the neckline, an important neckline where I put that box. Since then, rally, sold, lower low, rally. The question now is, can they clear 39.20? That one. If they can, then they might be out of the woods, but then they still have to prove that they can clear 40.5 as well. Until then, I would think that they're going to try to fade. Therein lies the opportunity. If they fade and stop at 35, come back, now we have a bullish setup. So if I'm long, I'm exiting. I'm selling a call spread. If I'm looking to get long, I'm waiting for dips on GDX. Remember, GDX is not GLD. It's companies. The GLD is a commodity or a rare. So it is the asset that the GDX move. It's kind of like Mara and the price of Bitcoin. Mara will move with the price of Bitcoin, but if the market is crashing and Bitcoin is spiking, Mara will crash. It will not spike. GDX will follow with the market. They won't follow gold prices if they're going in different directions. They might do it temporarily, but they cannot sustain it. That's my experience. GE, shortable spike. That's what I would say. Anybody that bought GE on the spike, you got to tell me why. Okay, so I looked at it. It looks like smoke and mirrors to me. I would fade it here, but it's going to follow the market, and it's a beloved stock. So on this week, if it does spike, I'm going to sell a call for December like I did last year. Somewhere early in the year, I got frustrated trying to time a dip. It worked. It didn't work. It didn't work. It worked. I was like, screw it. I went to December and I sold calls naked. So I will do just like I did with UAL. I will do that the same here. So my beef visit was smoke and mirror, 45% order growth, not sales growth. The sales growth was single digits. Repurchase plan, dividend boost, starting to sound like the old GE. This is a more focused company. The sales are considerably smaller than they were just like 5 quarters ago. But everybody's happy that they have a 45% increase in order growth, which are not sales. Starting to, that's a Boeing situation where they have orders for 10 years, but if you cannot deliver the plane, you don't have sales, right? So we'll see what happens here. I would definitely not chase it based on that earnings report. Therefore, it's shortable. A good base is below the yellow line, which is around 182. Shorter term comments. Gold. Hopefully you meant to ask about this company, not anything else. So this is not an obvious entry point. Gold, the price of gold is at highs. So like Bitcoin, same concept. If I'm looking to invest in gold a little bit at a time, I can start here, but why today? Right? So like if you've always looked to get long gold and now you want to invest in it all in, I don't get it. Better entry points lower. Alphabet, something going on with this company. I have to tell you, a social media sphere, side conversation. I don't know if anybody asked about Meta. They have, so I'll discuss that during Meta. There's something big going on in the social media sphere, I think. We'll see. 203 or higher will get you 211. And earnings are in 9 days. So this one reports next week, not this week. Buy the dip mode, that's what they've been doing. The first level is 194 for fast traders, slower traders 188. I could sell a put spread for this week. This would be an indirect bet that the reaction to the mega caps reporting this week and the Fed is positive. And I have the option to roll it into next week when it will have more premium. So it's not a bad idea if somebody wants to do an Iron Condor this week or something. I mean, it sounds crazy, but it's doable. If they make a higher high above this red box, you could probably shoot to 210 very easily. Look at the P&L. It's bulletproof. I cannot stand the company anymore because of their pricing behavior. They're price gouging, and the government should look into that at some point. I don't mean like, oh, it's too expensive. They keep ratcheting. I have a service from them, YouTube TV. I know it's a small bone to pick, but here's what happened. First signed up, it was $35, and then it was $39. And during the pandemic, it was $39, or just before the pandemic. And then during the pandemic, they raised their prices to $65. This is when everybody was unemployed and bored to death. They had nothing to do and they needed TV. And they found it appropriate to jack up their prices, 60%, whatever it is, the math, up to $65. This is at the same time when Zoom, a company that needed money, smaller, younger, gave away their business for free because they realized how much the world needed their services. Google decided to jack up their prices. And now that same service cost me $90. Not for me, somebody else in my family, but it's $90. It went from 34, 35 since inception to 40 to 65 or whatever it was, $64.99, and now it's $90. That is not cool, but there it is. They will do well. This will break out to 210, 220. If the market is higher, this will be higher. Very, very healthy company. You cannot short it because it's evil. You can just not give them your money. Home Depot, too expensive. The risk on companies like Home Depot is tied to how much we want to spend and tied to interest rates. So whatever Powell says this week may affect the stock price of this company. Anything above 426 is a sell. Everything below 394 is hard support. If you lose 380, you'll probably go into 350 in a series of lower lows and lower highs. I cannot buy a put for that. I would be confident enough to sell a call spread on a spike. So if my plan for trading the stock would be, if it gets to 428, 426 or higher, shortable with stops. Look at that. Same. Okay, look how close they came to filling this. So they might want to poke higher. There's probably a poke to 424 this week. On that poke, I may want to sell. So I'm going to put an alert here to look at it. I may want to consider selling a credit call spread before the earnings come in 30 days. Very sensitive to what we do. Hood, not for me up here. An amazing rally. I don't know their P&L. Is it getting better? It must be. Earnings in 17 days. They better deliver. Oh my God. They better deliver. Microsoft did the same thing. Okay, I don't know. They better deliver. Wow. Okay. So anybody starting longs in Hood here, please explain to me, what are you happy about? I mean, this was the trade of the century. Literally, this period of time will never come back, ever. It will never come back. This will never happen again. In August of 2021 through the end of 2021, we had a major top in the market because we have had announcements of trillions of dollars being literally thrown at the economy without much smart. Just think how much you need. Okay, here's 100 billion, here's 200, here's a trillion with no thought. Boom. This will never happen again, ever. And this stock is going into that zone. From that perspective, it's a no touch. If I'm long, I'm ditching it. Because where's the logic? Let's see valuation. Maybe I'm wrong. Let's look at it with an open mind. That's the sales growth. Pretty solid, double digit. You can't argue with that. Statistically speaking. Price to sales, 20, 18, 19. All by itself as a flat out number, not outrageous. It is high. Relative to itself, it's very high. So maybe the conversation is, oh, Nick, you don't understand. It was undervalued for so long and now everybody's seeing it. So I wouldn't short it. I just wouldn't start longs up here. Because I don't argue with stocks that do this for no reason. I just have no advantage. I think it's a trap. We'll see what happens. If I own the stock, I would consider finding some good calls to sell against my shares. That might give me some thousands of dollars while I wait. HPE, one of the HP splits, they're breaking out from prior fails. It's an okay P&L, pretty stable. Buy the dip mode, engaged. Any approach of 23 would be considered the dip. 22.60 definitely. Anything below 22 should be solid, and you have backup to the backup to the backup of support. So if you're lucky and this stock goes into 20 or lower and you've ever considered owning it, that's definitely a starter point, or if not, an add point. It looks like solid support. Buy the dip mode for me on this one. Earnings in 37 days. Intel. I said something about Intel that proved correct. It's worth a shot, like Lucid. Not that it's in the same predicament as Lucid, it isn't, but it's worth a shot. This was a beast. It still is a beast, although a dying beast. It's wounded. What if it does turn around? It's worth a shot for the long term. Anything around 20 is a good starter position for a Hail Mary pass, as they say in football. So let's say I want to risk $1,000 on this stock for the long term. I'll put 500 here or lower. It doesn't matter. Earnings in 4 days. And then if it come back down to 16, 15, 12, I'll add the second batch and just forget about it. You can wait until the earnings and pray that the reaction is down and do that. Or you can do that now, going into earnings, sell some covered calls, and cross your fingers, hope for the best. If you don't put all in, then you don't have to worry much, right? Because you might have the opportunity to add to it later, lower. We're not going to be able to enter perfectly, especially into earnings. So the message, I don't think we're looking at actual results. We're looking at the message. I asked and nobody answered me. What was that giant write down? $16 billion. When companies do that, it's because they gave up on a segment of sorts. So if somebody can give me that answer, that'd be amazing. Maybe you did and I forgot. I just don't remember. Your entry point at 22, selling calls. Yeah, selling calls, that's great. I wouldn't short it. Invitation homes. Real estate, not for me. Real estate is a risky business right now. Technically speaking, this could bounce. It's inside a very good support zone. So if you bought it for technical reasons, you got it. Hold it. You can stay long until they hit 28.50. You have buyers down to there. Anything above 33 is bookable from a trading perspective. IONQ. What is this? Tell me it's not a quantum computer. It is. Oh, Lord. All right. So even when the guy that is taking credit for the AI boom tells you decade in the making, people bought the dip. All right. So let's challenge the risk appetite in the stock. Let's see if they can get out of 49, 48.80 to be exact. Let's see if they can get out of 49. If not, I bet you they will retest 26. These are huge numbers. That's because the stock moves very, very bigly. Resistance. Top, middle, large. And if I'm fair enough, I would say support. And if I'm fair enough, I would say this better hold. Otherwise, you open a trap door in the next couple of months. Right there. I'm not going to put an arrow down, just opens a trap door. I'm thinking 15 doable or lower. Oh, there we go. This base right there. Yep, 16. So I wouldn't short it. I would just temper my enthusiasm a little bit. ISRG, they just reported. We traded the earnings pretty well. It looked a little bearish. We set up a bearish setup, and it played out. Great company. Controversial when it first started. I haven't heard much about it now. There was some bleed from their laser or whatever. It's surgical tools that are high tech. There's probably a possibility of revisiting this large candle here right there. So if you see it at 557 or below 560, don't be surprised. It's not necessary, but it's totally doable. So let's zoom in to see if we can break it apart. Yeah. 566, 568 zone is interesting. Let's see if I can get you. Okay, so these candles are well thought of. There's no open candles inside of these. So if they decide they don't want to do it, they don't have to do it. Those candles are well drawn. Like the bulls were crafty in how they rallied. They came back just enough to close all the gaps. I could probably say 556, 58. So anyway, you get the point. A bunch of support below. Fade the rallies into this, and if you make a higher high, of course you go up to 655, 660. Good company to own long term. Find your entry spots. If you want to buy some shares here, that's fine. If you want to sell puts to own some shares, if you have that kind of account, that's fine. If you want to sell a put spread on bad days, it's also fine with me. They just reported, so you have 80 days headline free. JP Morgan, I am short and struggling. I sold a call spread out in time. I did share it. I've done this before. It's come under fire before, and it worked out in the end. We'll see how risk appetite handles the bank stocks after Powell says what he wants to say this week. I am at risk. So if I have that position, I would defend it. If it's large, mine is not large yet. I'm not that worried. If it goes against me, my plan is to close it and reopen a sold naked calls to offset the dollar amounts. Like if I have 5 credit call spreads, I would close it for the loss and sell one naked call to make up the difference and walk away from it. And this is my nuclear punt, as I call them. We'll see. If I have 5 and I want to close one now to make my position 20% smaller, that's also viable. Coca-Cola, you remember we shorted it at the top because it made no sense the way it was traveling, the stock price? Like, what? Down here, it makes no sense to sell it. You're inside a huge split. Look, an extreme low, an extreme high. As they say, somewhere in the middle lies the truth. So if you think this was wrong and this was wrong, somewhere in the middle lies the truth, and that's where we are. So it doesn't make sense to sell it. It does make sense to nibble on it long term, if that's what I want to do, but it doesn't make sense to go all in on either case. It's at my target from up there, multiple targets. Even here, I said it might do this, and I wouldn't short it. Credit put spread would work. Selling puts to own shares would work. Owning shares for the long term would work. All of these, as long as they're half position. Like if I wanted to put $10,000, I would put 5. If I own shares, I could probably look to sell covered calls. 2 weeks, you'll get earnings. KRE, I am short, and I'm okay with it. I sold naked calls. I don't know if I shared it or not. You could convince me to hold naked puts as well if they're long term. Part 1 of 2. I took a starter position. I have room to more than double it. So if this week is positive for the banks, we could get to 67. And this is where I would add a little bit more. And then I would stop out after that. I think this area here is pretty tough. And an area around 66 is tougher as well. So I'm going to say resistance zone. Support zone below. Now, if for whatever reason they lose 57, oopsies, the banks are in trouble. That's not why I'm shorting. I just want them not to rally higher. I think I sold naked calls in the KRE and that's it. Lilly, I don't trade Lilly. It's too violent. Look at the stock. Look at the PNL. So the problem with Lilly is it's also healthcare, right? And whatever headline comes out of Kennedy, which I believe is somewhere in the 20th, somewhere this week, maybe, he will get confirmed or not. They're already late on this. If for whatever reason he doesn't get confirmed, this one will be at 900 probably within a couple of weeks. But I wouldn't hold a call for it. I think that's a long shot. I don't think anybody hates the guy, so he will get confirmed. And maybe they'll dip again towards 760. From a perspective of, hey, is this stock worthy of being here? Yes, it is. But it is a violent stock and it's going into earnings. So for me, it's just too nauseating. If you're an investor for the long term, I would make sure that I would look to sell covered calls aggressively. Lowe's, that would be my least favorite of the two between this one and Home Depot. Home Depot is more for professionals. Lowe's is more for, what do they call those? Weekend warriors. The one in my town closed. That's how much Home Depot was dominant. Technically speaking, anything above 270 should be a sell. Look left. That's a lot of sellers up there. And also, conversely, you have a lot of support below 252. So it's kind of stuck. I would think it's easier to get to 252 than it is to 274. But you could convince me to do an iron condor on it, like sell a put spread and sell a call spread and just range bound it. We'll see how it reacts to Powell. Earnings, it is not for another 31 days. LULU, not an obvious entry point. It's going into a prior fail multiple times. If they break out from 424, they're going to go to 460. So from that perspective, if you're riding longs for that, I see it, but you might want to lock some profits in. Like if I own a call, I would try to sell a call and make it into a diagonal. Buy the dip is okay. Support from 390 and lower. As long as they're above 368. Below 368, I would get nervous that they want to go back to 345. Good company, okay P&L, reputation hit and miss. Not cheap, not an easy entry point here. Mara, wouldn't touch it for all the money in the world from me. It follows Bitcoin. Bitcoin is almost at all-time high. This one isn't. Proves my point that I've been saying. If you're trading Bitcoin through Mara, you're making a mistake. That's one statement. The other statement is Mara is just too violent for me. It's too unpredictable. I pride myself on having good charting skills, good logic, and good skills in reading financials. And so this one infuses an extra something that I cannot forecast, which is the price of Bitcoin. So I could do all the homework I want on Mara and the economy and the stock market. And then it goes out the window because Bitcoin does this or that. So that's just extra risk that makes it no touch. The letter R still stands, the letter S stands, and there's more support at 1650. You lose 1650, you're going to 12. That's the way I see it. I think it's an exit as you approach the letter R, and it's a buy to dip as you approach 1650 with the realization that you might end up at below 14. Tradable, yes. 64 days until earnings. Not that the earnings matters for these stocks. MobileEye, okay, so it's eyeballs only, no LiDAR. That's that big $3 billion write-down, $2.8 billion write-down. Earnings in 4 days, God knows what they're going to say. From an investment perspective, it's hard to gauge, right? This P&L is pretty crazy. From a chart perspective, hard buyer at 15, backup buyer through 13. So if I sell a put at 15 to own shares and then they report earnings and it falls and I get a sign at 15 or 14 or 13, it's not the end of the world if I'm an investor. That might be a way to get into the stock. And you can use that money to buy a call or a call spread. Never sell a put without wanting or being able to buy the shares. That's how they break accounts. Sellers at 1850 or higher, multiple levels. Anything above 1850 or higher is considered resistance. That's chart talk. Fundamentals, do your homework on the company. Self-driving into the future, self-something, robots, so MobileEye is important, but they just pivoted big time based on what they should use. So be leery of it. Who is this? Microchip. Okay, so I wouldn't touch this for the simple reason that this is chip, microchip, technology, AI this, AI that, and these guys are going through the floor, and the markets, especially that sector, is going, technology sector, going through the roof. So you can see how they outdid themselves in the downside scenario that I had up here. Well, that same downside scenario plays out from here down to here. That's not my forecast. That looks pretty incredible. I mean, that's probably the pandemic low. It is. I wouldn't touch this. I would use rallies to get out. If I'm going for a trade, I would trade it up and scalp. Look at the P&L. It's headed the wrong way. It should be flip-flopped, right? Sales are crashing quarter over quarter. Year over year, it doesn't look it, but quarter over quarter, and not more than 4. So that's not seasonality, right? If you say, oh, quarter one is weak, well, okay, what about the one before it? So pretty scary stuff. Do your homework. Trade-wise, rallies into 68 or higher, I would be out. Mongo, we went long, bought the dip, I believe. Credit put spread, I would do it again. P&L, pretty okay. Databases, companies, and data. This is database, right? Yeah. So companies don't change databases often. So their base of clients is a good solid base. And if they're growing with that, then that means that they have a good future. Buy the dip mode, anything below 240 is arguably a good area. That red arrow is potentially there. So I can deploy that red arrow with credit put spread like right now, or sold puts to own shares. The market might flip lower and this one might go to 100 or 90, in which case will be a good solid entry point. If I'm long, I'm not adding. If I wanted to get long and I wanted to sell some puts or put spreads or buy some calls or some shares, I wouldn't mind it. I hate buying calls the most because time is your enemy immediately, so better put it to work and sell something against it. Good company, decent support, backup support, and back up to the backup. So leave room to double your order and then some. I mean it. Double your order. Like if I do 1,000, I leave room to add 1,000 and maybe a little bit extra. Don't take a full size position. All right. So this one did exactly what we thought it could do and then some. I said, this is vulnerable. They did that. I said, this is not easy. They did that too easily. Solid support. Anything below 1,700, solid support. Anything below 1,500, even better support. Anything below 1,300, even amazing support. Why do I say that? Because they do that often. What the heck is going on with this company? Look at the P&L. It could not be more boring. Look at the price action. It could not be more elastic. That's pretty crazy. One would think this is like Tesla. Again, I don't dislike the company. I just dislike the behavior of the investor. One thing is predictable here. They're buying dips on a daily. So if you went long, kudos. You might have some more upside. You're going to face some sellers at 1950 or higher. If they make a new high, they're going to go to 2,500. It's almost a guarantee when that happens. 25 days before the earnings. Meta, here comes the leave it alone. Leave it alone. I'm convinced, I don't have proof. I'm convinced they bought or invested heavily in TikTok and they were part of the deal. I am convinced. If you're a TikTok user, which I'm very new at TikTok, but I picked up enough know-how to know that a few things. When TikTok went away and it came back, suddenly Meta had an account and my account changed. The behavior in my account, the algo changed in my account immediately. Yesterday, I saw somebody saying, if you block Facebook on TikTok, your account will go exactly to where it was before. Wouldn't you know it? I blocked Facebook and immediately my account went back the way it was before. There is no doubt in my mind that Meta is involved in the deal of TikTok being on. I don't know how. I don't know if it's monetary or what. Don't short Meta. Do not short Meta. I don't know what's going on. I'm just telling you a little kiddie stuff, but it adds up. Leave it alone. The stock performance is amazing. That's because the P&L is amazing. They print money. I can't stand it. They print money though. So the idea, oh great, so my Oracle short is going to be, send me the link, Rich. Somebody's saying Oracle is involved in the headlines of that. 680, 700, totally doable on the breakout. It will react to the earnings in 3 days, up or down, I'm not sure. I am sure of one thing. The earning numbers will be unbelievable. I'm not sure about how much of those numbers have already been baked into the expectations, so the reaction is still a coin flip. We can make it better than a coin flip if we look at the options on the day of. So come to me before the bell rings on the day of, and maybe we'll look at the options. It's a great company to own. My God. Okay, so let's short this Mo Flicker. What the look, what the someone, do you guys know what's going on here? This is 3M. Don't I remember just catching it and everybody's worried about, oh my God, it's falling off a cliff. What the okay. Wow. Holy mackerel. Oh my gosh. Okay. Definitely not an obvious entry point. This is where they failed. Okay, so how about we say it differently? It's taking them 1,200 days to come back to this level. Not for me. If I waited this long, now you're feeling comfortable as an investor, this is not an obvious entry point. I don't know about irrational exuberance. Whatever caused it to fall probably was crazy too. Like this one on earnings, I get it. This one also on earnings. So what are they celebrating? Where is this? Like this one just happened, right? So what are they celebrating? Let's look at the fundamentals. Let's look at the statement of affairs. They're still shrinking 20%. What? They're spiking it. Like what? This proves the expectations point I'm talking about. Okay, that's two huge upside reactions in the stock of 3M. Two huge ones. Double-digit shrinkage. Not like 5% shrink or single-digit growth. 25% haircut in the sales. Sales, like a company is literally dying compared to last year. And a huge spike. That's about expectations. All right, let's see the valuations now. PE is 19. Definitely on the high side. If we go to 2023, it's double. A price to sales is 3, double anything else to a long time ago. This is a no touch. For me, shortable. Like if the market has a hiccup, this one is going to come down to reality. Anyway, so there's something going on that I don't understand here, because if you look at it, the company's literally, the company sales are dying. Must have been financial engineering, buybacks and whatever. That would explain it. Dividend increase. So the company sales are shrinking double digits, and two huge upside reactions. Did I add it? Yeah, I added it because I want to track it. Wow. Wow. Okay. Merck. Everything I said about Lilly applies to here with regards to Kennedy getting appointed or not. This is a solid bounce level. It better bounce, and if it does, it probably go to 106. But if it doesn't, it's probably going to 88. You be the judge. It's just as easy to go to 88 as 106. Earnings in 9 days. If it gets to 98, 99, that's an exit. Like if I got long here and I got to 98 or higher as a trade, I would be out. Moderna. Everything I said about Merck and Lilly with regards to Kennedy apply here. So I would never consider putting a dime in this company because it doesn't suit my profile. But I know really smart people that find it a bargain down here because they believe the future is theirs. Too controversial of a company to say it's dying, but zero is a possibility in all companies, let alone one like this. So do your homework. These companies are very hard to invest in, but very easy to put in a few bucks in it for the long term. Like, what if, God forbid, we do have another pandemic or another scare? Or what if they succeed? I think they have one pipeline coming, maybe. They're working on a cancer drug. What if they succeed in that? Worth a flyer. So let's say I wanted to put in $1,000 in it for the long term because I have a $100,000 account. Don't put more than 1%. So I would put 500 in here. And if it falls down to 20 or lower, I would add the other 500 and forget about it. Calls, in the money, long dated calls maybe, and try to sell calls against them. Sell puts to own shares. If I wanted to own at least 100 shares, that would be one way to do it. I probably would guess that it has pretty good premiums. I don't know much about the industry, but that's simple logic I just told you. This one is an avoid at these levels. Okay, another boring P&L. Losses are expanding, which is not a deal breaker for me, but it's not a good thing. And the stock is this an all-time high or is this one of those pandemic stocks? No, it is an all-time high. So you've seen me, we've gone long the stock on dips and we struggled with it, right? So at one point, people hated it. This is an avoid. In fact, this might be shortable up here. Gosh, I hate myself. It's like short this, short that, short this, short that, because just makes no rhyme or reason. I'm a numbers guy. If you're a number and logic guy, where is the logic? Price is up here. Fundamentals, well, let's go in there. We're looking at a lot of fundamentals today. Revenue growth. It used to grow double digits, and now it doesn't anymore. So what gave? Nobody's concerned that it used to go double digits, grow double digits, and now, well, it shrunk double digits at one point, and now single digits, maybe shrinkage, maybe isn't. It's pretty bizarre. So let's see here. Annual sales. Trailing 12 months is 5.4, which is about the same as last year. A little bit less than 2022. A little bit more than 2021. A lot more than before. So I guess progress over the years is good. But cash from operations, not an issue. Overview. No margins. Terrible business to be in. Just the COGS alone puts them down to bare bones. So just by presenting the burger to the plate is like there's nothing left. You need to pay rent and overhead operational expenses, put it negative. Let's see, what kind of sales did they do here? Data center, enterprise networking, carrier infrastructure, consumer, automotive. $4.4 billion in debt. nothing good about it. They don't. If they liquidated the company, they still owe 3.5, so they don't have a lot of assets to offset it. Statistically speaking, 20 times sales. That is incredibly. This is shortable based on valuation alone, and I'm speaking price to sales, not PE. Okay, I'm fine with it losing money. I'm not arguing with that. It used to sell single digits price to sales. Now it's 20. I don't know. You be the judge. If I'm long, I'm out. This is definitely not a starter point. MSTR. Short. No, don't short. I don't trade MSTR. I did trade it short on the last poke high, and I made some money, but it was too uncomfortable. So they did 3/4 of the first arrow. They avoided the second. So if they come back down and lose 303, they would continue the path towards these two arrows. So they're not out of the woods. They made some progress. How about I say it this way? This area, they need to clear it. As long as they're inside this or lower, they're at risk of finishing this over time. Earnings are not going to bail them out. 10 days from now, they will report earnings. Well, maybe Michael Saylor can say something. The guy is genius, right? He's very smart, so you can't bet against him in the long term. This company can make an all-time high, and I'll show you where. If they take out 406, the upside potential will challenge the highs. Okay? So don't short it above this box. As long as they're below this box, at or below this box, they are, quote, shortable for a trade. Who is this? MSTU? What is this? 2 times long MSTR. Okay, so everything I said there applies here. So I don't understand people that want to do this. Does it pay a dividend? If so, I get it. If it doesn't pay a dividend, what's the advantage? MSTR not fast enough for you? You need 2 times? Whew. You got a strong stomach on you. Okay, who is this? Micron. I liked it down here. I hated it up here. Here, I'm agnostic. It will follow the market. Technically, 112 area of resistance, take it out, you go to 130 maybe, 125, 130 or more. Tons of support below, tons. So if it falls back into this zone, I will rename this to be a support zone. All of it. I will take the hash marked out. That was an area of resistance. They blew past it like it wasn't there. That's concerning. This is an area of resistance. I will repurpose it right there. Anything above this, I'll make this box green. If they go above the green box, they can really expand. Like, look at it. Inverse head and shoulders. The upside potential can be $20 easy. Huge October earnings breakout line. So that's a pivotal zone. We should mark it and pay attention to it. September breakout zone. And we have, I'm going to move it down to here. I mean, if I was picky, I'd say this is unfinished business. They might come down here. So anything below 95 is interesting for the longs. Anything into 110, 112 is super resistance, but the opportunity. So buy the dip, yes. Holding longs, yes. Credit put spreads with a debit call spread, yes. All of this captures the opportunity for the upside. If you're optimistic about the market, this is a good long. The best way to do it is to sell risk below to finance some purchases of calls or call spreads above. It would be a free long. Totally tradable. If somebody has a bearish portfolio, this will be a good way. Educate yourself on what's going on, like anybody else reporting. This one reports in 2 months, but is anybody else reporting? Knee, too violent of a stock for my personal taste, but we'll give you levels. Anything above 77 is hard resistance and exit zone, and you must hold 66. Support at 68 and 66, but if you lose 66, you're probably going to 61. Like this guy right there, I will put him here. We can take out all of this. support, but if you lose it, another leg lower. Meanwhile, the opposite of this one is up there. Resistance, and everything above that is. That's not it. Anyway, resistance zone. Let's see if we can make it smarter. Nope, it was perfect where it was. It's a zone. Okay, okay P&L. Profitable, but I don't like the sales path. That's not crazy bad. Netflix, crazy. The reaction to Netflix was overblown. The report was good. This was the options showed something going on at 800 to 840. They were like $12 million worth of transactions on the day of. That was a blind side. The reaction up was outsized. Like the report was solid. Good company, beast. The CEO. Up here, it's at all-time highs. If you now capitulated, said, oh, I'm finally going to invest in it, good luck. For me, buy the dip. Definitely. Don't short it. Buy the dip. Nobody's going to cancel Netflix. They cancel 100 things first. If we hit the skids as a people, we will not cancel Netflix easily. Norfolk Southern. Didn't UNP just report? This one reports in 3 days. Wow, that's an ugly chart. Choppy. Anything above 264 will take you $30 higher. Dip buying opportunity just below at 220, better at 210 or lower, better anything below 185. So if you're lucky and it drops on earnings, get long. Nike. Okay. Hey, Nike. Good company, excellent fundamentals. Everybody hates on it. I would think that if they can get to 75, they can get to 78. But look at how many sellers will be transacting there. Look at this wild earnings reaction, this orange box. My God. You don't see boxes like this often. That's just crazy talk. This Nike, boring company. So I would say floor at 70 if I wanted to sell puts to own shares. But it doesn't pay a lot because it's a boring company. And anything above 80 is a hard sell. So your range is that blue box. If you want to sell puts to sell calls on rallies, that's fine with me, or call spreads. Earnings in 53 days, so if you have plenty of time. It could drift to 72. The descending channel, yeah, but you hit a floor. I mean, how much lower can Nike go? It's got excellent financials. Nano nuclear energy. I'm out. Chart, not going to help you. If you're looking for me to tell you something to do with the chart, you're mistaken. There's no income. There's no logic for me to follow from that perspective. Do a deep dive on nuclear energy and which are the winners and spread your money across them. In fact, if there is an ETF that captures all of them, that's probably the smartest investment you can make. If you're a fan of nuclear energy, having a lot of money, I'm starting to smell a quantum computing situation, a pot situation where it's going to take so gosh dang long for them to actually show something on the P&L that people are going to lose interest and the stocks are going to fade back down to the single digits. That's me speculating. Do your homework. I would use an ETF that puts a blanket on all of these that you like. ServiceNow, buy the dip, of course. That's what they just did. Breakout, questionable, but available. A new all-time high would fuel another rally, or buy the dip for the next all-time high. Look at this P&L, solid as a rock. Solid as a rock. Earnings in 3 days. I'm foreseeing that they'll probably say we're going to split the stock, and the stock is going to go through the moon. Don't short it. Buy the dip, yes. If you're invested in it, you might want to sell some covered calls. NRG. If this is another nuclear, this one at least has a P&L. I can ignore the nuclear headline, and this is a short. This is an exit long because it's probably going to 104. It might even go to 101. So for me, if I were to guess, I think it's easier to get to 104 than it is to get to 118. In fact, I would hold a put or a put spread or a credit call spread. All these are shorts in as long as they're below 117. So 117 and a half or higher would be my stop. NSC, Norfolk Southern. Okay, so another transport, this is a train company, no? Look at how pivotal that line is where they just did this flippity. Look left and see how violent. Look at that large dip right here. Look at that large wick right here. That long tail right here. Huge bounce, huge resistance, huge breakout, and boom. So I would think anything around 261 plus or minus $3 is extremely important. So I don't go long into it. Buy the dip into 244, 245 or lower, anywhere. It's not going to be surgical. It could be 240, 238, but at least you're not chasing. Right now, you're stuck between 247 and 261. 247 and 261. You're stuck. Earnings in 3 days. We'll see what happens. NVIDIA. For the life of me, what is going on with this company? Are you kidding me, people? Best fundamentals. The accomplishment of this company are unmatched and I think are once in a lifetime. You will not see another mega caps do that. Here's the scenario. Look at this P&L. You look at it. I'm serious. Look at this P&L. Can I draw on the right side? I doubt it. Can I draw here? Crap, I can't. Okay. If you're at home watching this video, the difference in colors between the blue and the light blue. The blue are the sales, the light blue is the net income on the P&L, okay? Look how close together they are. Just focus on this. Okay, I'm going to switch to Microsoft and come back here. Microsoft is an unbelievable company, and look at the distance. That just gives you the quick visual margin percentages at how much more profitable NVIDIA is than Microsoft, which is the cream of the crop right there. And then you get this beast. That is insanity. And if you go to an annual base, you will see the huge leap. Look at where profitability was and look at where it is now. So, unique opportunity. Why are they so hesitant? And they sell it every once in a while like it's toxic. Look at what happened on Friday. The market broke new records on Friday. They will try to push it. If they go above 149, I think they can test 153. If they break through that, I think they go to 170. This company should be a 170, 180, 190 if the market continues higher. It's underpriced, believe it or not, compared to these other companies. So I'm a fan of buying dips. I cannot wait for it to crash so I can pick up a bunch more. If you're long, I get it. Just make sure. See if you can sell some covered calls. Earnings are not soon, but they will move with the other people's earnings. Oak, One Oak, great trend. They're buying dips on the daily. 111 looks like a catalyst to 120, but I would think it's going to be incredibly difficult. Super strong support. So you got support from here to 97. It should be impenetrable. If you lose 97, then we can have a conversation. I'm not going to talk about it because it's ridiculous. And just like I don't think we can break out from 111. So you're between 111 and 97. Long, wide range, right? So I'll put the visual here. I'll give you another version of it that is a little bit tighter based on some other interim levels. So these are, box 1 and box 2. Anything above the box 1, anything above the yellow box is exit. Anything below the yellow box is a buy the dip. So trade that way. Investor, do your homework, hold it forever if you want to. So you're telling me that we're going to open up on ORCL, going to be gapping up? I hate it. I'm short. I sold a naked call in ORCL. It's green, but it won't be green if we gap up. Anyway, ORCL reaction here, I don't remember what it was about, whatever this was. I shorted it against this. That's my only short. Fundamentals are fine. This is a dinosaur from back in the day. Totally respectable company. They closed all the open gaps here, but now I'm shorting these candles. So this one has been closed. So I will, my rule is I do this. Now you have a bunch of them down here. So why don't we do that? Why don't we do that? Why don't we do that? I'll put one here for now. So maybe they have an incentive to come back down to this yellow area first. And they don't need to fill all of these, although there's another one down here. because of these transactions. So how about we say that 172 matters a lot? This one right there. That's an important spot on the way down. Anything below that should be solid support. Okay. I'm not shorting Oracle by holding puts. I sold calls in Oracle. All right, later. Who is this? Palo Alto Networks. Okay. Solid P&L. I don't know what the heck that was. $1.7 billion one time before. Technically speaking, this stock is going into a place where it should fade. Anything above 195 should be very difficult until they clear 205. You clear 205, you can go to 220. But I think it's not going to be doable. Earnings in 30 days. Anything below 178 should be solid support, 175. So you've got solid support below, huge resistance above. So if I'm a guessing guy, which I'm not, I'm a educated guess guy, so I use data to guess. You're stuck inside this box. With the caveat that a poke above 205 will probably give you 220, 218. And with that, we finish video 2.